Good morning. We're pleased to host TRX Gold, which has 3.5 million ounces of resources in Tanzania. It's some ex-Barrick people and some other good friends trying to bootstrap up from 360 tons a day to 1,000 to 2,000 to make a little bit more gold without issuing too many shares at once. Stephen, I'm going to let you tell the story before I say too much.
Thank you. No, thank you, John, for the introduction. My name is StephenMullowney. I'm the CEO of TRX Gold. Joining me this morning, Mike, you want to provide your introduction?
Yeah, Mike Leonard, the Chief Financial Officer, and as John put it, a former Barrick alum. Thanks for having us, John. I think it's been a couple of years. Good to be back.
Yeah, thank you again, John. And just to clarify, John, we have 2.5 million ounces. Hopefully we get to grow over time to 3.5 million ounces in the measured, indicated, and inferred categories. So without further ado, we'll get into our presentation. First, disclaimer, obviously, please go to our website, read the disclaimer. We will talk about forward-looking statements here. We have notes to U.S. investors. I won't spend too much more time on it. Thank you. So TRX Gold at a glance. So who is TRX Gold? TRX Gold is a company that's underpinned by a good asset, a great asset, by the way, of the Buckreef gold project in Tanzania. As John mentioned, we have 2.5 million ounces in the measured, indicated, and inferred category, 2 million in measured and indicated at 2.0, around 1.8 grams per ton. We are currently self-funding through positive operating cash flow to build up of our mining activities. We did have originally a 360 ton per day plant. We expanded that to 1,000 tons per day and then to 2,000 tons per day June of last year. That was all on time and on budget. And so we are continually looking at further expansions and optimizations. The good news about Buckreef is what I described here. It's been the historical resources. There's been lots of other resources found around the property, which we need to drill out, particularly around the Anfield zone, as well as the Stamford Bridge zones, and there's other zones on the property as well. Obviously, we're a Canadian American company listed on the New York Stock Exchange and TRX, so we adhere to good CSR and ESG standards, and we have a long history in the Gator region in Tanzania with other miners, including AngloGold Ashanti. Barrick has big mines there as well as Shanta Gold. I'm the CEO. We just hired a new COO, Richard Boffey, who's a former Barrick as well. Great experience, has been in Tanzania before. Mike Leonard, who's on the line, as well as Khalaf Rashid, managing our Tanzanian operations from a political perspective and corporate development perspective in Tanzania. Last year, in fiscal 2024, we did around 20,000 ounces with $40 million in revenue and $15 million in EBITDA, which means it's a high margin operation. Our license area is a special mining license, so we have all the pertinent permits in place. We're open pit currently, but as we get into the presentation, we will go underground at some point in time in the next 2 to 4 years. We currently have a 2,000 ton per day CIL plant, which is going through optimizations to increase recovery rates because it's more of a what I'll call an oxide plant. It needs to be upgraded to a sulfide plant. And proven and probable reserves are around 1 million, M&I around 2 as we indicated. Mike, anything to add from an overview perspective?
No, I think that summarizes it well, Stephen. Thanks for that. I think really it's a unique asset. It's got a significant resource base to start that John touched on at the start of the call. We're hoping to add to that over time through the drill bit, which obviously you'll get into in some detail. It's a growing production profile, which we'll talk to, 3 expansions in 3 years. And, while we're still in the early stages of our growth life cycle, we have been able to demonstrate leverage to gold price with year-over-year increases in really all key financial and operating metrics like revenue, operating cash flow, and EBITDA. So lots more to come.
Yeah, so I won't spend too much time on this slide. It gives an overview. We consider ourselves an emerging gold producer, very excited about that, with a lot of blue sky potential. And we've been able to operate quite successfully in Tanzania and build out the operations utilizing a lot of local labor and local content to build out these assets on time and on budget. We'll get into what we've raised, but I don't think there's a lot of people who've built plants and built up an asset at this type of cost profile. I think you'd be hard pressed to find that anywhere else in the world, and we've been able to do that. So like I said, we're high margin, significant resources, ongoing drilling program, and we have sustainable cash flow currently. So with regards to where we are, we like to say we are in elephant country. And why do we say that? We have AngloGold Ashanti's mine about 30 kilometers away in Geita that produces 400,000 ounces per year roughly. Barrick's Bullion, Hulu, and North Mara complexes combined produce around 400,000 ounces. There's former mines of Barrick's in Tutawaka and Buzwagi there as well as Golden Ridge, which is Golden Pride, which was a Resolute mine, is in the area as well. There's also Nyanzaga, which was purchased by Perseus from OreCorp in the last 18 months, which is a significant deposit around 30 kilometers away. So we are in an area that has a long history of mining with a lot of major mines. And we are utilizing that because there's human capitals in the region. So this is why a large reason why we're able to do this. Also, it provides the local infrastructure. Only the last 15 kilometers are unpaved. We have a paved road to the rest of the way. We are connected to the national power grid. And so all the infrastructure, both from a human capital and physical perspective, are in Tanzania. Like I said, the reason why we're also able to do this is the Buckreef gold deposit comes to the surface. So we're able to mine with a low strip up front. Obviously, that strip increases as you get down into the ore body. We have decent recovery rates, particularly in the oxides, are around 88%. We're down around mid 70s to low 80s in the current plant with sulfides grinding at the 75 microns, passing 80%. So our MET studies show that as we grind down further, we get higher recovery rates. So we're now looking at optimizing the circuit to put in a flotation followed by a regrind in a high intensity grind mill. We're currently putting the finishing touches on what that will look like. We're responsible. We have a lot of exploration upside, as I mentioned, and we'll get into that further in the presentation. With regards to the history of the company since Mike and I joined in 2021, we came in, we changed over the entire management team. A lot of the board members have been brought on in the last couple of years. We spent a lot of time cleaning up the balance sheet as well as figuring out how to make a business out of this, and that's the original 360 tons per day. Also drilled out certain parts of the deposit to verify extensions. And then we started to grow from 360 to 1,000 to 2,000 tons per day while still having to drill bit in the ground, discovering new shear zones and new resource potential. And then started to get record revenues and record cash flow. We really have ounces are a means to cash flow at the end of the day. So our focus more is on increasing cash flow as opposed to mining ounces for the sake of mining ounces. And I think, we have a keen view on any time we spend money, what is going to be that payback period. So payback period drives returns and IRRs and return on capital. So the quicker the payback period we can calculate, the better it is. We've experienced payback periods, I believe, Mike, in the range of some projects are less than 3 months. The maximum one thus far has been about 6 to 7 months, I believe.
Yeah, high IRR, quick payback projects. And again, John touched on it. We kind of bootstrapped our way up from a small test plant to 2,000 tons a day with 3 expansions in 3 years. And it's really just sort of worth noting, we brought the 2,000 ton per day plant up to nameplate capacity just in Q4 of last year. So expect production from here to benefit from that larger plant going forward.
So if you look at what we've done since 2021, you'll see a consistent increase in both the tons milled as well as gold ounces produced. We're going through currently in the last 2 to 3 quarters a lower grade patch in the ore body. So that has impacted production. So although the plant is double, production is kind of the same because the grade is half right at this point in time. We expect the grade to increase. We're starting to see it in the last couple of weeks. The higher grade starting to come through the mill now. as we get to the more south part of our pit, which has significantly higher grades than the north part of the pit, as we move through, and the stripping campaign has gone well. And I was there over the last couple of weeks, and certainly we're almost to the higher grade ore blocks in the deposit. So expect the production profile to increase from after Q2.
Stephen, some of the numbers are small, and I'm an old man, and maybe I need to upgrade my glasses.
Yeah.
So the production numbers are the numbers. The big blue bar is the grade.
No,
And
it is
the line that's rising geometrically is the tons. Is that the right way to read this?
No, the line that's rising geometrically is just showing a trend line. So that's the mill expansion up to 2,000 tons per day, and we hope to continue to grow that. So that's just a trend line. The big blue bars are the tons processed, or tons of ore milled. And you would see H1 2023. Obviously, in our milling circuit, oxides go through a lot quicker than sulfides because they're already ground down, right? So we're into the sulfides part of the deposit, so it's a little bit slower going through the mill.
So you had a double whammy where triple whammy, the grade fell, the tons fell, and the metallurgy grew more complex.
Yeah, that is a good way of putting it. I wouldn't say it's so much metallurgy grew more complex. It's just that when you're in sulfides, it's harder to crack open the ore to access the gold in the CIL circuit, which is normal. So it's all about grind size, and grind size. The oxides you're able to grind fine.
Okay, excuse me for interrupting.
Yeah, no problem. So with regards to prudent capital management, we have not done a capital raise in, I think, over 3 years. When you look at the net amount of cash that we raised, was over 3 years ago, was around $25 million in net cash raised. Since then, we've made an investment into the asset of $54 million, which means that we've invested over 2 times in the asset versus what has been raised. And we've been able to put in place a full mine, although still small and growing, for less than $25 million. So that gets you your 2,000 ton per day plant, as well as all the mining equipment that we currently bought, as well as utilizing contract miners to put in place a mine that's currently producing over 20,000 ounces and growing. And we'll come out with forecast over the next month or so around what we expect to do by the end of 2025, which should be higher than last year again. And we've been able to do that on a cost-effective manner while keeping G&A actually going down a little bit over time versus going up. As we continue to grow, I expect G&A will grow a little bit, but certainly with the gold prices that are in place now, adjusted EBITDA and cash flow from operations is stable and growing as well. So we've been able to do this very, very extremely cost effectively. Now that we have the experience behind us as a younger management team, expect us to look at other opportunities where we can utilize this sort of methodology as well. And we're feeling more and more confident and comfortable in executing, growth assets and the ability to build the mining assets on a very, very cost-effective basis. We've learned where to get the labor. We've learned where to get the equipment. We've learned how to design and execute this, put in place the proper Gantt charts to do this all on time and on budget. So it's been a great skill set and learning experience to get to this point, and expect us in the future to be utilizing this skill set that we develop more and more to build out more and more assets, hopefully. Mike, anything to add to that?
Yeah, I think maybe just to add to it, Stephen, I think it's fair to say that, well, we are looking at, strategic opportunities, to your point, and perhaps finding something analogous to what we've been able to do at Buckreef elsewhere. We are also certainly already looking at our next expansion at Buckreef. We are looking to grow the throughput. From here, and John are already looking at things like, SAG mills and possibly HIG mills, high intensity grind mills, to help further increase that throughput at Buckreef. So looking at both sort of organic opportunities here as well as strategic opportunities elsewhere.
So I mentioned Buckreef and where we view it in the markets. Just a couple of other points on Tanzania that I haven't mentioned is the support for foreign investment is high in Tanzania at this point in time. I've been over to Tanzania the last month or so, meeting with government officials on that sort of angle around supporting more and more foreign investment, making sure proper agreements are in place. There's been over $2 billion in M&A and IPO transactions in this country in the mining sector over the past 24 months. You have Lifezone with the Kabanga Nickel project. BHP put $100 million into that as well. You also have Perseus taking over OreCorp. It has a very mature mining sector, which I've mentioned a couple of times. Gold exports are almost $3 billion now in Tanzania from all the mines that I mentioned. I mentioned the production profiles. The mining code is well developed and permitting regime is well developed. So when we need to increase our tailings facility, taking the ministries through that is quite straightforward. And for other permits like water, etc. And what we've been impressed with is the local supply chain. Obviously, we grew this asset during COVID. So, and when we started out, and we were able to utilize a lot of local suppliers and the Tanzanian supply chain to do that, and we continue to utilize that. And so what we've gotten familiar with is how to bring in local suppliers, particularly in Tanzania, to build out assets. So where do you get your pipe fitters to, weld tanks? Where do you get your electrical contractors to develop control panels and electrical components for the mills? And where do you get your agitators, for instance, and bringing those in, ball mills, bringing those in, how to pour concrete and plinths and steel works related to that, how to get your crushers and all your systems, conveyors, that's all locally built, particularly the conveyors and things of that nature. So we've gotten very good at putting this together and utilizing local labor, and that keeps the cost down. That's why we're able to do what we're able to do at the prices that we're able to do that.
Well, and Stephen, I might just add one or two comments for the benefit of the audience. In addition to all the points you made there, it's a very, very safe place to operate as well. For example, we drive ourselves around in country with no security detail, for example, which of course is not the case in other parts of Africa. You've got, under the current governmental regime, it's a very, very stable political jurisdiction, and when you compare that to certain parts of West Africa, East Africa, and particularly Tanzania, looks like a very, very investable jurisdiction. And again, Stephen just got back from there, so can comment. But John, I think what we tell people is we see it very much as a tier 1 jurisdiction to operate in for all the reasons Stephen just mentioned. And the main takeaway is it's a place you can get things done. Try and permit, develop, and grow an open pit operating mine as quickly as we've done it here in this part of the world. It's just not possible, politically and bureaucratically. And so we see it as a place you can get things done and have the results to show for it.
So on that, I mentioned this before, all the mining assets that are in the region. I won't go through this too much in depth anymore because it's a little bit repetitive, but a lot of major assets in the Lake Victoria gold region. Here's a list here. We have Buckreef, Bulyanhulu, Buzwagi, Gaeta, Golden Pride, Golden Ridge, and Tulawaka, all kinds of mining assets in this region. With regards to the first quarter highlights, obviously we're benefiting from the record gold prices because in order to benefit from it, you got to have some production. We've had some really good exploration drilling results. We're starting to experience the economies of scale on the plant, which we expected, so our per ton cost of processing came way, way down, which means lower operating costs going forward. And our production has been in line with expectations, and it's a mine sequencing thing and grade that it means that production is, although the plant is doubled, production is stable. As that grade profile increases, production will rise with it as well. So with regards to the new 2,000 ton per day processing plant, it's operating in line to what our expectations would be. And you can see a couple pictures of that plant here. You see the crushing circuit, you see our open pit mining operations, as well as the mill in the background on the first picture. And this has enabled us to decrease operating costs. Look, next time we do another expansion, I expect operating costs to decrease even further. When I look at, and Mike and I look at the process flow sheets, to add a sag and put the flotation and regrind on the other side, There's no more labor required for that. Perhaps there's even less electricity because you take a large part of the crushing circuit out. If you put a SAG there, you just need to go from a jaw crusher to the SAG versus having secondary and tertiary crushers. You also can eliminate the 3 small ball mills that we have to increase throughput through the other ball mill and integrate it with a SAG. So we expect to see lower operating costs over time as we continue to develop. As you're getting a sense, Mike and I are into the details, so we know all these numbers and get into quite a bit of technical detail for our backgrounds. The mine sequencing, as I mentioned, is we've gone through a strip campaign. I've been there in the last couple of weeks. Richard's on the ground right now, our COO, and the strip campaign has gone well. We're down around the old voids that were there from the underground mining days back in the, I think, late 80s, early 90s. And obviously they went after the higher grade stuff first. So in around those is the higher grade material. We're just starting to get a taste of that. We don't expect to really get into that in a big way till around June, but we're starting to get a portion of that, as well as leading into that is higher grade than we've experienced in the north part of the pit as well. So with regards to the sulfides, and as I mentioned here, you heard me talk a lot about circuit. And the reason why we talked about circuit and bootstrapping, a lot of mines would go and just put in place the ideal circuit right away and spend all the capital dollars required for that because they want to get off the ground and start producing 100,000 to 200,000 ounces plus right out of the gate. So you put in place the ideal circuit right from the get-go. So we have predominantly a circuit now that is, crush, grind, CIL. And in order to upgrade that to be in line with the MET studies that we've done, which is grind size, we'll need to put in, for throughput, we put in a SAG. And then on the back end, you put in a regrind, and a flotation and a regrind. What that does is, right now we have 75 microns passing 80%. So in a SAG, you'll get 100 microns passing 80%. With a regrind, you get it down to around 40 to 50 microns to increase your recovery rates to 88 to 92% in that range. So we know where we need to get to, and we need to plan that out, and we need to balance, throughput, recoveries, and grade and cash flows till we get to that and build out that circuit. So it does take a little bit of time to do it, but we're in that planning stage right now to unlock the sulfide potential of the project. Mike, anything to add? Because we're knees deep into this as we speak.
No, I think so. I mean, we're working with an Inusian group out of Australia to help us map out this flow sheet. But again,
comminution means grinding to the neophyte.
Yeah, sorry. As a chartered accountant, me talking about grinding consultants is certainly a new experience for me, but just demonstrates how much I've learned being part of a junior mine that's growing. But it's about improving grind size, to Stephen's point, as well as viscosity in the CIL tanks to really liberate the gold from both the rock and the carbon more effectively. So the goal is to take that recovery rate from late 70s, like Stephen mentioned, with sulfide rock to late 80s, early 90s, which we can do with some of these basic add-ons.
Yeah. So just to get a little bit more technical, Mike, we're also putting in place a new elution circuit, which is going to help and regenerate carbon.
Elution means. Say what elution means for the people on the webcast.
Well, that is where you take in the CIL tank, you have cyanide and carbon. So the cyanide dissolves the gold, the carbon attracts the gold. Then you take your carbon out and you put it through an elution circuit, which takes the gold off the carbon. So we have more of what I'll call
carbon stripping, and CIL is carbon and leach.
Yes.
So we go from rock to solution to cyanide solution to carbon to elution carbon stripping.
Correct. Yeah. So
I'm trying to not use jargon.
Yeah. On the back end there, we're updating that elution circuit because it's more rudimentary right now, and it's going to be more automated going forward, which will help increase recoveries and regenerate the carbon. And you're familiar with that, John, to make it attract the gold in its simplest form more efficiently. So that's part of it. We're also going to have at the front end, a thickener. We don't have a thickener yet for the sulfide rock because currently we mix sulfides and oxides into a proper blend ratio in order to increase viscosity or floating carbon in the tank so it doesn't sink. With regards to exploration, this one always brings a smile to me. So everything we've talked about thus far, and if you can see my cursor, is between these two dots right here, these two stars. That's the Buckreef main zone. So when we talked about mining, when we talk about the ounces that are in the ground, that's all along this trend right here. And so that's where the 2.5 million ounces lie. And that's roughly about a 2-kilometer trend. Now that is open along strike and is open at depth as well, and certainly needs a lot of infill drilling over time, as well as expanded resources just in the main zone. But when you start to look around the property itself, right here we have an eastern porphyry, which is an historical resource there, followed by the Anfield zone down here, which we discovered. And the Anfield zone has some great intercepts in it as well, and we need to drill out that trend. We think that trend is just as long and fruitful as the main zone. And so there needs to be a lot of exploration put into that, and that's shallower resources that should be able to come into a mine plan over time as it's expanded. Now, one thing that was discovered as we got down into the pit is we noticed a cross structure coming across the pit. So it was a different structure than we normally see in the pit, which is the Stamford Bridge discovery. And this is where we've gotten the best drill hole intercepts that this property's ever had, which is a cross structure between the Buckreef main zone and what we'll call the Anfield Eastern Porphyry sort of trend. And that's quite shallow, and we got really good drill hole intercepts there with over 200 gram-ton meters. We need to do more geophysical surveys on our property to figure out if there's any more of these cross structures, because typically in this type of geology, from what I understand from the geologists, I'm not a geologist, there should be more of these structures in the property, so we need to do the geophysics to determine that. But we're really pumped for the exploration potential here around this property. There's been, all the white dots here are artisanal workings. So a lot of this stuff has come to surface. So we have a really good idea where we need to put the drill bits. But as you're bootstrapping up, your drill program probably isn't as large as you would like it to be. It takes a little bit of time to develop this and patience. But certainly, I think once we, do our ramp up, get to the good grade, and we start to really put the drill bit in, we really believe that there's a lot more gold potential here, but a lot more what I'll call mineable ounces that are cheaper, because this stuff comes to surface and is better grade. So one thing in mining is grade is king. When you look at what we're seeing in the Stamford Bridge zone and the Anfield zone, we're hopeful that the grade is higher than we have in the main zone, which means lower cost. And we're hopeful that it can get into a lower cost profile as a result. Mike, anything to add?
Yeah, I might just add a couple of comments, Stephen, I guess to orient the audience. I mean, it's a 16 square kilometer land package, to Stephen's point, that's largely undrilled. I mean, you could see in the previous slide that 2.5 million ounce resource is really just contained within a small portion of the land package. And I think, John, I mean, we've only got, 125,000 odd meters in the drill hole database, roughly. So to Stephen's point, lots and lots and lots of opportunity to drill it. Those parallel shear zones that we've identified through artisanal workings, some of the grab samples that were being pulled out of the pit are in upwards of 30 grams a ton, and according to our geologists, look virtually identical to the shear zone fabric in the main zone. So lots and lots of prospectivity. We got to drill it out, of course, but again, lots and lots of prospectivity to hopefully grow this resource over time.
Yeah. So on that point, Mike.
Excuse me, could you elaborate on the Stamford Bridge?
Yeah.
It's a subzone of the existing pit. So it's not a new discovery in the sense that it's a new part of the property. It's within your pit?
Yeah, it's within the property. So it's right here, John, what you'll see is the Buckreef main pit right here. And Stamford Bridge is just to the right of it.
So it's an extension of the pit to the northeast.
Yeah, so what ends up happening is the pit goes northeast like this. And so this is a cross structure that comes right across. So we have Buckreef West over here, and then we have Stamford Bridge over here. And so this is a cross trend that goes straight across the pit.
So the cross fault is a cross plumbing. The great ore bodies are usually at the intersection of the biggest faults on a continent.
Yes, yeah. So when you're looking at what we've intersected there at 37 meters, 7 grams a ton, from 5 grams a ton, 8 grams a ton, great grades into this, and fairly shallow as well. We're looking at how to go access this, and it's obviously underground, but you could go traverse right in from the pit right now, and reduce strip ratio and things like that, just some underground development to get there. As I mentioned, Buckreef is going to go underground because it's a vertical deposit. So as you strip, it gets wider and wider, so your strip ratio becomes larger. So we do need to go underground. We're looking at that now. We're studying that. I expect in the next couple months that we'll have results of that study go on the market. I think given that we're in production, understand the measured and indicated resources around improving and proper on an open pit. I think we'll go with a PEA to show some of the stuff that's deeper and in an inferred category and what that might potentially look like. But certainly this is very easy to access, but it does need to be drilled out further.
But to reiterate, Stephen, right at the headline, I mean, literally the best drill results ever in the history of this this asset that's been around a long, long time. So very exciting.
Very exciting. Over 200 gram ton meters. I'd like to see that. So with regards to, I mentioned this before, we are good citizens. Well, a lot of people ask us for what we do on CSR and ESG programs, and I kind of take this answer as we're good citizens. So if you're a good citizen, naturally you have good ESG and CSR. So we invest in the communities, schools, and health facilities, as well as other local programs. We're constantly looking at ways to procure locally, even with food, 100-kilometer diet, all these sort of things. We recycle all our water. So as good citizens, you're just good at ESG. And so we take this to the heart. We have 750 people on site now working between us and the contractors. So it's a decent little operation that employs a lot of people that has a good community reputation, is the way I would put it. With regards to capital structure, listed on the TSX as well as New York Stock Exchange American. Most of the trading's on the New York Stock Exchange American. Not unlike a lot of small caps, stock has been under pressure. We've delivered. We've said everything that we did everything that we said we would do. And the market hasn't really taken notice. We do get out there and market and things like that. But, Mike and I talk about this all the time. I think, as well as others in the management team, we'll continue to keep our head down, get out there, and continue to execute the way we're executing. So eventually, this will turn. We're not an explorer code that comes to the market on an ongoing basis. We haven't been to the market in 3 years. We may or may not go to the market. And if we do go to the market, then it'll be put to good uses and with a high return and be good for shareholders. So I do think that we've built up our skill set, that we're prudent capital managers that take care of IRRs and returns, although it's not reflected in the share price. And in that regard, we'll continue to utilize shareholder capital in a prudent manner. Covered by 3 investment banks in the United States, middle market investment banks with a price target over $1 in all of them. And we're about 15% institutions, 15% management, friends and family, and 70% retail. With regards to the key investment highlights, I said we got strong growth and sustained profitability. Like I said, we only execute high return projects. We expect these numbers to continue to increase over time. We've proven ourselves out now. We've been around here for 3 to 4 years and have proven that we're able to do this in a prudent manner. Our property has a lot of blue sky potential in a great jurisdiction. We're able to get a lot of things done on a very cost-effective basis. And as I mentioned, we have an experienced leadership team that we continually now continually attract better and better talent, particularly on the ground, in order to execute our strategies. So that's a little bit on us. I think, John, we took around 40 minutes, which is around the time that you allotted us. And now I think yourself and others are going to grill us with some questions.
So there's some questions in the question box, but let me just begin. What is your production guidance for fiscal 25?
We're going to come out with that in the next month or so. So we got a new COO. We want to make sure that he's comfortable with it and put it out. But I expect it to be over the production levels of fiscal 2024. And as I said, we are going through the low grade portion of the deposit into the higher grade portions of the deposit in the second half of the year.
And just refresh me, your fiscal year is November?
August.
So your first quarter output was November.
November and then February, correct, yeah.
Did you publish what was your output level for the November quarter?
Yeah, we did. Mike, what was our numbers there?
We did just under 5,000 ounces of production, John.
Have you published your February output?
That'll be published on April 15th.
And your reserves and resources, the M&I is inclusive of reserves. That's how I gave you 1 million ounces too many?
Yes, correct.
Okay, I might not have read the fine print. There could be others like me.
Yeah, and so that's also, just to qualify that, John, it's under 2003 rules, which is, in the fullness of time sort of aspect. So when we come to the market with an updated plan, it will be pit constrained or mine development constrained, which is not the same number.
Could you talk a little bit about Tanzania, the country, and why Tanzania is different than Mali or Panama or Uzbekistan or Kyrgyzstan? The country operates smoothly for mining when some others had some bumps in the road.
So I think, look, when you're looking at jurisdictions like, and I'm going to segregate the ones that you just mentioned. When you mentioned Kyrgyzstan and you mentioned Panama, there's not a lot of mining assets because they're smaller countries. So the governments under major mining assets take a different view of them. And in those countries, well, we all know what happened to Kumtor, and we all know what happened to the big copper mine in Panama. So that takes on a much larger political nature. With regards to the West African countries that you mentioned, obviously there's been a lot of influences from the outside into those countries. There's been coups, and those mining assets from a revenue perspective to the governments have been put under pressure. And I believe the governments are currently working through that, and the mining companies are working through that as well. But it's been a bumpy road, to say the least. With regards to Tanzania, it has lots of mining assets, so it's not just one or two. It has quite a few mining assets. It's a well-endowed country that's probably underexplored. And so the political aspect of it is the government is encouraging investment to continually develop these mines so they can have the royalties, taxes, jobs that come with those mines in order to fund, government programs. So that's the focus in Tanzania. We're constantly talking to government officials into Dodoma, and I separate Tanzania into two aspects. You have Dodoma and the government aspect, then you have what you can actually get done on the ground aspect as well. And, we focus on what you can get done under the ground because that helps manage the government aspect of things. And that's the approach that we've taken quite successfully. And we're always encouraged to continually expand the asset. So it's been, relatively good experience. I have a lot of experience of going around to some of the countries, John, when I was a partner at PwC. I've been to a lot of the countries that you mentioned and dealt with governments in those countries, both on the government side actually and on the company side. So I'm familiar with moving through these jurisdictions. So in my experience, and I'm getting older and older, the jurisdiction can be bad one day and good the next, and change. And there are consequences to actions. And once governments figure out the consequences of those actions, it usually becomes more investor friendly for a longer period of time. So, we look at, I went into Tanzania, Mike, when it was just turning over from the Barrick Acacia dispute days, and then those mines never shut down. So, and it certainly, we've had no bumps in the road as a result.
Could you just give us a little information on the demographics of Tanzania? What's the total population?
Around 65 million today, so there's a lot of people. So it has a large subsistence farming industry. It also has a lot of what we call small scale mining industry as well. And it's, that population is anchored by a few large cities and a lot of rural population. So Dar es Salaam, the capital, is around 8-9 million people today. Second largest city is Mwanza, with over 1 million people. The capital is in the middle of the country in a place called the Dodoma. If anybody's ever, seen The Lion King, and what is it, Simba Hill is there. It's identical in Dodoma to what you see in Disney. So there's a lot of tourism in Tanzania as a result of the Serengeti, the Ngorongoro crater, as well as Zanzibar. So it's a well-traveled country as a result. And look, I would say, things that I look for, and Mike mentioned it, is it's safe. There's not a lot of stealing there. The wares are left inside the street overnight and covered up. We could drive around quite safely. The food is good there. And the people are great. They're fairly sarcastic, fun-loving people. So we've had, as I said, a successful experience there.
Yeah, Kilimanjaro, Stephen, as you know, huge tourist destination, and I think demographically, John, we talked about supply chain, predictable and secure. The port of Dar es Salaam is one of the largest shipping ports in all of Africa, so a good place to get equipment and supplies in and out of the country fairly efficiently.
What's the breakdown by religion? Muslim, Christian, other?
Yeah, that's a good question too. So I don't know the exact breakdown, but there's no friction between Muslims and Christian and other. So what you'll see is there's a large Indian population in Tanzania. Obviously, there's a native or black population there. There's a Middle Eastern population as well. So along the coast, you'll have a lot of Muslim religion, particularly in Zanzibar and in the coastal cities, with Christianity interior, and they all get along. I don't see a large difference between them. So we would have all religions on our site, and they get along just fine. There's no friction. There's not even friction between tribes. One of the things that Larry did was he kind of encouraged movement across the country of people, and that kind of took away a lot of the tribal aspects that other African countries would experience.
It's a little hard for me to read the question box, so bear with me if I'm slow.
Yeah.
This questioner cites 5 catalysts for your stock. The first is the material impact on the share price to date.
Can I see the question box, John?
No, I have it, but it's hard for me to read.
Okay.
The first is hasn't had a material impact, which is to date, but the price of gold. The second is renegotiation of 55-45 JV. Getting through the low grade and forward guidance. So we've covered a little bit of that.
Yeah.
Tell us about the JV structure.
So the JV structure currently is 55% TRX and 45% Stamenko, state-owned government parasital entity. That is dilutable at this point in time. And so, as I mentioned, I've been over to Tanzania over the last couple of months several times in front of government negotiating team around this. They have laws that came into place in 2022 around the framework agreement, but we have a joint venture agreement that's in place, and we're discussing how best to set up a win-win-win scenario where the local communities benefit, the government and national governments benefit, and shareholders benefit, and what is the best structure for that. And I continue to have those discussions. The framework agreement laws are 16% non-dilutable, whereas currently we have a 45% dilutable interest. Obviously, it's a negotiation, so you will have people on both ends of the spectrum beginning those negotiations. Those discussions are ongoing and going well.
Is it possible for your stake to rise if the government does not match capital?
Yes.
So is the issue whether you stay at 55 or get bigger, or is there an issue where there's a haircut?
The issue is 55 and getting bigger with capital coming in, or moving to a framework agreement that's more akin to a non-dilutable versus a dilutable stake. So obviously there's a valuation equation there. 45% dilutable is probably less valuable than a 16% non-dilutable.
So if the government doesn't match capital, is the structure that a payback structure where you advance their money, there's an interest rate charge, and they have to pay you back with interest for loaning them money?
So with regards to the way the JV is currently structured, capital can go in as a shareholder loan, or capital can now go in as an equity call. And if it went in as an equity call, it wouldn't be as a shareholder loan. If it goes into a shareholder loan, then it would be repatriated back tax-free.
Are you loaning the government money right now?
I'm not loaning the government we're not loaning the government any money. Capital to date has been put in as a shareholder loan.
Excuse me for just trying to understand it.
Yeah.
There's all kinds of different mechanisms around the world for different countries and companies, and we get confused easily.
Yeah.
Depending on the exploration of Stamford Bridge and the drill holes to depth for the underground, how do you think your operation is going to evolve in the next 5 years with the information currently in hand?
Yeah, so I would extend this to the Buckreef main zone. These operations will go underground, is the way that I would view it. So what does that mean? When it goes underground, you don't need as large of a plant because your grade profile, head grade profile is going to be higher when you go underground. So given that it's a vertical deposit on the main zone, and given what we're seeing at Stamford Bridge, I suspect in the next 2 to 3 years, this operation will start to go underground, and we'll provide more details on that, I would suspect, in the next couple of months, which means we're a large way through it.
Super.
Yeah.
If you started to put some high grade through, would you use some of the sulfides to top it off and utilize some mill capacity and get a little more output?
Yeah, so with regards to how so is your question, how do we increase mill output?
No, the question is what do you do with the slack capacity of the mill when you have the high grade underground ore going through?
Yeah, I suspect we will size the mill to what we expect we can mine underground. There may be a little bit of slack in the mill, which can be supplemented by the stockpile.
So the sulfides are not an alternative to utilize some of the surplus mill capacity?
Yeah, we got sulfides going through today. So just so we're clear, like it's about a mix of 80-20 sulfides to oxides that go through the mill today, even though it's not the ideal sulfide circuit, which we're currently looking at upgrading to a predominantly, 100% sulfide circuit. We can get there pretty quickly. All we need to get to get 100% sulfide circuit is to put in place the thickener. And then to get the recovery rates is the back end.
Is the underground sulfide or oxide?
sulfides. So
So
anything
you
that-
might, so you may be transitioning to 100% sulfide circuit with the thickener
yeah,
at whatever capacity that is.
correct. So when you look at, if you look at Buckreef, the goal here is to get this to be a 100,000 ounce producer for 10 plus years. We're getting through the details on that now, and I'm fairly confident that that should be able to be the case at some point in time.
Well, that's a wonderful goal.
Yeah, well, look, in order to build something that's valuable to boost that share price, that's what you need to do, because then you become more attractive to people.
Just for perspective, one of our first screens was a $3 billion in situ resource at trough prices. It used to be 3 million ounces, but now 1 million ounces is that dollar value. But we use trough prices, and we like companies with 1 billion pounds of copper, 3 billion pounds of zinc. We're metal agnostic. So your company met our size criteria. And we like the fact that you were bootstrapping up and some of the guys came from Barrick, et cetera. And I'm just explaining to the audience why we have TRX Gold on with Wheaton Precious Metals and Osisko and Sandstorm and Agnico and Weston. And we respect that you have gold resources in hand. And our $3 billion in situ resource, or wanting to have a deposit, is our humility. We don't want to host frauds like Bre-X. We are impatient at exploration stories. Sometimes the geologists are full of prunes, and sometimes the maiden resource is only 200,000 ounces. So this discipline of just maintaining that the speaker has a resource and it's not Bre-X. Subsequently, we found we've hosted 143 companies bought out for 124 billion US combined. We're oblivious if there's no market cap, no revenue, and you need $1 gazillion to build the mine, because that's the nature of the beast. So I'm just giving you an idea of context in the audience. We're just humble and honest and don't want to host Bre-X. So we want to make sure the companies have a deposit. And if it's out of the money, that's okay, because sometimes the metal prices rise. So thank you for telling us about all your progress. And the underground and the Stamford Bridge sounds very interesting.
Yeah.
We look forward to your guidance in 2 weeks.
Thank you. No, thanks. Thank everybody.
Thank you, everyone, for your attention. Have a good afternoon. Travel well on your next flight.
Thank you.
Thank you.